The federal government has announced it's stockpiling oil as coronavirus continues to spread around the world. It's spent nearly $100 million on fuel to bolster Australia's supply. And along with the price of petrol dropping, household energy prices are also falling. For more, the Energy Minister Angus Taylor joins us now from Goulburn in New South Wales. Good morning, Minister. Welcome to breakfast.
Thanks for having me, Lisa.
Let's talk first about that oil purchase. How many days do you get for about 94 million at this stage?
Well, it depends on the price, but the point at the moment is the price is very low. And they're historically low indeed, and that's why we're getting on with it now, building these fuel stocks, ensuring we've got fuel security. It's an issue that we need to deal with to ensure that our critical industries, our essential industries, whether it's manufacturing, farming, tradies, commuters, have access to that fuel they need to live their lives. I think we're all attuned to essential industries more now during the COVID-19 crisis than we were. We don't have a problem with fuel security at the moment. There's more than enough. But we have faced disruptions historically. We've handled them well, but having access to a strategic fuel reserve strengthens our position in the event that we do see a disruption into the future. And now is a historically good time because of low prices in order to do that. We would expect this will buy many millions of barrels of oil, and 1 million barrels is about a day's worth of supply for Australia. But it'll depend on the price in answer to your question, Lisa.
Yeah, but I guess for people who aren't familiar with oil purchasing, myself being one of them, that it's not as if we're purchasing months worth of oil. This is a handful of days that we're purchasing with this.
Well, the initial purchases, the 94 million, it'll depend on the price, but it'll be many millions of barrels. And what it will do is start to secure our position. I mean, right now we have international obligations on this. We have between 55 and 80 days. Yeah, well, we've got a 90-day obligation, and right now, depending on the definition you use, it's between around 50 and 80 days. It ebbs and flows a bit that we're actually holding. This will start to build those stocks and ensure we're compliant, and that's an important thing. We came out of compliance back in 2012 under the previous government. We're moving now. When the opportunity presents itself. Look, if you're buying at $80 a barrel, you're going to spend a lot of taxpayers' money, or you're going to have to pass this on at the bowser. When you're buying at much, much lower prices, indeed we saw negative prices just within the last 48 hours, you're in a position to buy a lot of fuel and give really good value for taxpayers' money.
No surprises, though, that the critics have said, how are you improving the domestic fuel security for Australia if you're buying fuel and storing it in the US?
Well, that's an interim measure. I mean, right now there is no storage available almost anywhere in the world, and that's not surprising because of COVID-19. That's one of the reasons why the oil price went negative. Buyers couldn't store it anywhere. Now, we, through our strategic relationship with the US, have the opportunity to store oil, crude oil, in their pre-existing storages they've had for many, many, many years.
How much is the rent?
And over time, what we want to do. Well, the good news is, without giving you commercial confidences, is that our relationship with the US is good, and so it's obviously a very attractive rate.
So but what's interim, though, when you say interim?
Make here is that over time, we want to build more storages here in Australia. We do need that. Now, our storages right now are creaking. They're full because of the collapse in demand. Our refiners have continued to produce fuel and use fuel, crude oil, and so we're filling our storages, or we're very close to full for all of our storages. So we need more longer-term storages. We've been in discussions with the refineries in recent times to start looking at locations and the best way of increasing those stocks here in Australia. The alternative right now of the US is a good one. They're a very strong strategic partner. Obviously, in the event of a disruption, they're about as good a partner as you could hope for, and that's why we're getting started in that way at a time which is absolutely historic because of the low prices.
Low prices as well with energy. We're getting the reports out today that it's the lowest in 4 years. Are you confident government, all of that is being passed on to consumers, both domestic consumers and businesses?
Well, we want to see it passed on. There's no doubt about that. Consumers, depending on who they are, how big they are, will have contracts, pre-existing contracts. As those contracts turn over, we want to see these reductions pass through. They're very significant in both gas and electricity, and they were occurring, Lisa, importantly, before the COVID-19 crisis came along.
Decreases,
the first quarter of this year.
When you say you want to see them, are you confident you'll see them?
Well, the good news is that we put legislation through the Parliament only a short while ago, which requires the electricity retailers to pass on substantial and sustained wholesale cost reductions. Those wholesale costs are about a 50% or more of a bill, but around 50%, up to 50% for a typical household customer or small business customer, significantly more for a major commercial industrial customer. So these are really significant cost reductions we're seeing. There is a legislative requirement now that this is passed on. The ACCC, of course, will be watching very closely. I've had discussions with the ACCC chairman to ensure that we are monitoring this and we're ensuring there is compliance. But yes, we expect them to be passed on.
Angus Taylor, thanks for your time this morning.